Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 20th of June. So I've certainly seen some pretty strong action this week. A lot has to do with geopolitical issues, of course, but we'll see if we can dissect the market and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've basically continued the reasonable fall from the previous highs at around that sort of 65.50. It did get there only a couple of times really throughout these candles, but you can see that we've had a pretty ordinary week in terms of movement down. And today's session is starting to pick up a little bit. We can see we're trying to get back above that moving average, but it's a very, very congested zone. If we really block off that period at the lows of these candles around that sort of 64.75 all the way up to the basic closes of 65 sort of 30, it's very, very heavily congested. You can see that the opens and the closes fill that space completely. So look, while it's trying to trade above the 20 moving average, and it is certainly trying at the moment, it obviously had a bit of a gap on open, but it is trading higher now. If we can manage to close above that 20, I think that there is an opportunity for it to continue on and get back up to that sort of 65.50 area if there's enough market momentum. But it's very important that that closes above the 20 moving average. If we see a breakdown of that and we start to see continued weakness and lower highs and lower lows on the smaller time frames, and we close below the 64.50 cent mark, then we're in trouble, I think, and we're probably going to look at a move down to 64 flat as the next the next real target, you could say, on the low, but it has to close a daily below this level first. So really happy to play this one both ways. While it's above the 50 moving average and the 20 moving average on the daily, we'd look to make moves up to the 65, 30 and to 50 area, this zone up here. I'd be keeping it scalping. I wouldn't be looking for anything longer than that right now. I think we're in a very, very volatile time, so I'd be keeping the trades relatively tight. And of course, if we see a breakdown below 64.50, I'd be starting to target the 64 cent mark as your scalping opportunities. All right, we'll move over to the US dollar CAD. And you can see we have had a resurgence this week. You can see we've had 3 or 4 decent candles in a row pushing off these lows. It was very, very weak prior to that, of course, but we have hit the 20 moving average now. And yeah, while it's been, every time it's touched a 20 moving average, it's obviously sold off. We can see that it hit it there and sold off quite significantly. The only thing I can say about it now is that we do have MACD divergence. There's no question about that. I'll draw that for you now. You can see here the MACD divergence on the price and on the MACD indicator is bullish, and it's A-class bullish. So really, it's the best divergence you can get in terms of market movement. Whether that's going to be enough to actually halt this fall from grace, I guess we're going to find out soon enough. But obviously, oil plays an integral part of the US dollar CAD, so you've got to be a little bit careful. We know that the oil price is up and down and all over the place at the moment, so just be mindful of that as well. But you can see that we're trying to push past the 20 moving average, a very, very important zone for it. If we can get past the 20 moving average, then it opens itself back up to a move up to sort of 137.80 in the first target zone, and then up to around that 138.50 as the second target zone. Both of those are viable trades, but first of all, we have to get a daily close above that 20 moving average. You can see it attempted to go higher in the previous session and came down and closed below it. Now, this is obviously just Asian trading, the Asian session trading right now underneath the 20 moving average. So the US session is going to be a vitally important one in the closing of the week to see where it ends up. But on Monday, if we're trading above the 20 moving average, I think we're looking good for moves back up to the 137.80 and 138.50 as a secondary target. But if we maintain levels underneath the 20 moving average, I would look at starting to target the previous low again around that 135.50. Again, most likely scalping opportunities. I wouldn't be looking for anything longer than that on the US dollar CAD. All right, US dollar yen, and still looking pretty strong. We got a series of higher highs and higher lows. You can see we've had that happen on the daily. The 20 and the 50 moving averages are fast approaching each other, so we're going to see, short of a massive sell-off in the next few days, we're probably going to see a cross of this moving average. We haven't seen that happen since the market was all the way up above 150. So it is a significant cross on this pair. There's no question about that. And we are starting to get a bit of a rounding bottom. So look, the opportunities are up to the 146.50 in the first instance. Again, it's about 80 to 100 pips probably once you get that break. I'd be looking for smaller time frame changes of trend. If you go to the smaller time frames on, even if you went to a 1 hour chart, you're going to see all of the patterns that we talk about every single week, the higher high, higher low sequences all the way up. And I would look at those continuing to get to the next target on the daily. So pretty straightforward trading, really. What we want to see is continued higher high, higher low momentum on the smaller time frames, and your target being the 146.50 in the first instance. Okay, it's a pretty good support zone where it was over here, which is going to provide what we would expect resistance in the first touch, especially. So I'd be looking at scalping up to that zone. All right, over to the dollar index. The all-important dollar index is trying really hard to break through. We've been in a downtrend, there's no question about that. We can see all of the pullbacks to the 20 moving average have been problematic every time it's got there. Again, it's failed to close up above. Now, again, we must be mindful that we are in a very, very volatile situation on the world scale, really, where there's a lot of anticipation as to what's happening in the Middle East. So that is playing havoc a little bit with the markets, but they are behaving themselves probably better than I would have expected, given there's so much uncertainty. So look, it's at a very, very important zone. You don't need me to tell you that. It's underneath the 20 moving average, sitting right at that sort of 98, 60-ish area. It's very straightforward for me. On Monday, if we're trading above the 20 moving average, I'd be looking for moves back up to the 150 level, which is this line over here, the first red line. If we're trading under the 20 moving average, so if the daily is closing under the 20 moving average for the week, I'd be looking at reigniting the lows down to around that 97.80 area. That zone is the zone I would be playing in right now. We have not changed it to an uptrend yet. Okay, we're still seeing lower highs and lower lows on a daily. And while they are in play, we have to have a negative connotation to the market. There's no question. But that said, we are at a very important zone. There's no question about that. So what we want to see is a trade above the 20 moving average. If that's where it's trading early in the week, I'd be looking for moves up to the 150 level, and that will reignite a higher high, higher low sequence, which basically brings an end to the downtrend, and then we hopefully see a little bit of strength in the dollar index. Over to the euro, which is, of course, the inverse. You can see we've seen a little bit of power kick off the 20 moving average. It's been higher high, higher lows all the way through. Pretty straightforward with this one as well. I'd be looking at moves up to the previous highs at around 116 as the target. So going to the smaller time frames, if you see a series of higher highs and higher lows, could even do it on a 15-minute. You're probably going to see it. So there it is there. Pull back to the 15-minute 20 moving average, and off it goes. Any pullbacks to the 20 moving average, I'd look at continuing that trend. That's going to obviously see a little bit of weakness in the dollar index. But again, it is trading under the 20 moving average at the moment, so that wouldn't be a real surprise. The target, though, I'd be keeping them fairly tight. Again, just be trading with a lot of caution right now. Keep them fairly tight. I'd be looking at a 116 as the initial target for the long. And if for some reason it reverses and trades itself underneath the 20 moving average, especially if that's next week. So if on the daily 20 moving average, the euro is trading underneath there, I'd be starting to look at the 113.80 area as the next target zone for the short. So reasonable trading on the euro, but we've got to wait for the opportunity and keep the ranges fairly tight. I wouldn't be looking for all-time highs just yet, or recent all-time highs anyway. Okay, and over to the S&P 500. Look, it's been obviously subject to a lot of influence from things that aren't as technical as they should be, and that's not really going to change in the analysis. I think you have to be very, very careful with the indices at the moment. It's hanging on for dear life above the 20 moving average. You can see the previous session was negative. It's picking up a little bit in today's session through the Asian session. Tonight's is going to be very, very important when we see the close of the US on Friday. That's going to be a really, really important close in terms of, are we underneath the 20 moving average or not? So if we're trading above the 20 moving average on Monday, I'd be looking at moves back up to around that sort of 60-50 area as the target. But if we're trading underneath the 20 moving average, which is probably just as likely, especially if we see some volatility in the session, and we're trading underneath the 29 sort of 30 to 20-ish area, which is underneath the 20 moving average, a close below the previous day really is what we're after. At that point, we'd be starting to target the 58.50. And if the moves get really serious, 57.50 is the secondary target on the S&P. But ideally, you want to be trading with a lot of caution in this environment right now. Let's just let it play out a little bit. But if you're going to scalp between those two zones, and that's the easiest way to play it, given what we're looking at right now, until things settle down. So I hope you've had a great week's trading. We've seen some pretty good levels hit. Hopefully you're able to take advantage of some of those. Have a fantastic weekend. I look forward to seeing you all next week.